I hope you guys are good. So today we will be talking about the crash and the boom. So let me look the market that we will maybe begin with. Today we will learn how to trade the crash and the boom. So this is how you come and search your market. You'll just come to the search symbol, then to the Deriv. You will come to the Deriv, and then you can remove that market and then scroll down, checking any market you want to trade. So for us today we will be checking the crash 1000. Sorry. So if you want to trade these markets, you have to know the market structure. So you have to know how the trend of the market also is moving, and some key zones like maybe the order block. Only those key things that you want to have then to have that knowledge to trade these markets. So for the first thing is the structure of the market. We know generally that how to trade an uptrend, we must see the market moving, creating higher highs, creating higher lows, creating higher highs, creating higher lows, creating higher highs. We know this, that the market moves using this concept. So just looking at this market, we know that whenever the market is creating higher highs and higher lows, we have something we call the break of structure. So as the market is moving that way, it creates something we call the BUS, or the break of structure. We have discussed this before. Maybe I'm just repeating very quickly for those who have not watched or are new to this channel. So the market creates something we call higher lows and then creating higher highs. I hope you can see what I'm doing, guys. That's how the trend of the market or the market takes that kind of movement. So this is for an uptrend, and you can see here we can just see basically on these 20. This is candlesticks representing the daily candlestick 24 hours. You can just see the market is creating higher highs and then creating higher lows. This is how the market is creating higher lows, higher highs, and then higher lows, and maybe it will continue moving to creating higher highs. That's how the uptrend is formed. For a downtrend, it normally creates higher lows and lower lows. So you can see here the market was creating higher lows. This is a higher low, then creating higher lows and lower lows. So the market was moving, creating higher lows and then coming down to create the lower lows, and that's how the market moves. So if you have that concept on your mind, this is how the market moves, and then it creates the break of structure as it moves downwards. So that was a break of structure there. So with this concept now is what we have to know to trade using this concept of trading the markets of boom and crash, and specifically for today, crash 1000. So for the downtrend, we have said it creates the lower low, then moves to creating the lower lows, higher low, the lower low, higher low. That's how the market moves. So if you have not checked this kind of content, just check it on the YouTube channel. And with that knowledge, we now know how the market moves. It was just a short recap. We will be using the 15 minutes to now get into the real trading and see how people normally enter this trade. So on the 15 minutes, we can spot that the market now here is creating let's just use this example. We have noted this is an uptrend, and how is the market moving? It's creating something we are calling again higher highs and then higher lows, and then creating higher highs, so and then higher lows, creating higher highs. That's how it's creating generally. So we can spot how that market, how it's creating the higher highs and the higher lows. So we can now also just see on the 5 minutes how the market is behaving. So when we will be using this concept to trade on the 15 and the 5 minutes. That's how we will be using to trade these markets. So coming back to this, you can see whenever you see a downtrend or an uptrend, you will note it is creating the higher highs and the higher lows. Just backtesting, you will note the market as it moves, it normally creates that such structures. So let me first go back just to the 15 minutes, and then we see an example starting from scratch. We look for an uptrend and then we enter some trades and see how you would have scooped those trades. So here is a market showing the 15 minutes candlestick. So this was an uptrend, this generally was an uptrend, this one. So let me mark that this one was an uptrend. And why did we conclude that? It was creating the higher highs and the higher lows. So let me mark them. So it was creating the higher highs, then having a pullback, which is I told you it's called a pullback, or the market is fast breathing, then moving on to create higher highs and then creating higher lows. So let me first put that. So it went on creating higher highs, and then after creating that higher high, so let me put that well. After creating that higher highs, and then it went on to create a higher low. Yes, then moved on in the same manner. So that's how the market usually move. So I want us now to enter and assume we want to take a trade. So we will analyze on the 15 minutes, then take the trades on the 5 minutes. So you have notified that you have noted that the market now is moving. This is an uptrend. Now we are on an uptrend, and it is moving, creating the higher highs and the higher lows. Meaning, now what do you do now? You will find for the highest points and the lowest points. So just using this horizontal line, we can spot the highest point for that is there, and then we can spot for this highest point is that area. So generally it's just spotting these areas. So the highest point of there was there. So this is how you will be spotting. You just look for the highest points the market went. So for that one, it's that area. So let's use the 3 points. So you have noted this is the highest point, and the market, as I told you, was breaking structures. So this was a break of structure, creating a break of structure, the BOS. So the market, as it was moving up, it's creating higher highs and higher lows, and then breaking the structure to the upside. So you see, that's another BOS. That's how the market was moving, and we have discussed how they normally move. So looking at this, this was the highest point after the market went. So it broke that structure again, BOS there. So you already know now the market is moving well, moving on the upside, breaking all those structures. So we will start with this one. It has broken this structure, and you have seen the market has moved. So what do you do? Let me zoom out here. So what you do is, now after you have noted this the structure of your market, you pick your Fibonacci retracement tool, that one. Then on your lowest point, the market went, pick that from that point, then move to the highest point of that, the other break of that highest point of that break of structure, then scroll to your right. So so you can see how it has aligned itself. We have the 0, 0.2, 0.3 and 0.5. What you come and take your rectangle, your rectangular shape or your lines, and then mark this area of the 5. So mark that area around the 5, then pick your rectangular. I use this rectangular. I'll pick again this zone of the 6. So that's the zone of the 0.6. After marking those two zones, you can now remove the Fibonacci retracement, and then maybe if you have not zoomed out, zoom out and observe carefully. Look for any order blocks, and I told you an order block shows that any candlestick which is maybe like not resembling the other colors. Now you let me look for an order block which is very straightforward. So maybe you have a red candlestick showing in between the green candlesticks. That's an actual order block. But for now, on the 0.5, we can see this is the area in the 15 minutes. So this area, we now want to look whether there will be an order block in between here on the 5 minutes. So that will be the entry point. So come back to the 5 minutes, then move to the zone that you have been waiting to see. So that's the zone I have been waiting to see. So I'm here now to look for an order block only. So let me zoom out. Good. Looking at this, just look at how the market is behaving. So just look at how the market is behaving. So this is an actual order block, this one. The market was moving up, and then there was a print of a red candlestick there showing an actual order block. So it now shows that the market will reverse. So that's an actual order block, signifying you have not to worry about the market now moving up, and whenever that market crosses that, you can pick your buy trade on that area. So you will enter your trade when you see that zone. So leave alone this order block, just look at this one. The market tried to move using this green candlestick up, then printed this order block here, and I've told you, let me just explain in simpler terms. A candlestick that maybe on a certain trend it has formed and does not resemble, does not have the same color with the previous with those previous candlestick and the one which are forming currently. So that's an order block. So that's now the actual order block that you should be concerned. This is a red order block, this one. So let me give it maybe some color so that you can understand and see that actual order block, what I mean. So you see this is a red color candlestick that now represents the order block. So when you spot this on the 5 minutes, now you have analyzed on the 15, come back to the 5 minutes, you spot that you have now the actual to take a complete good buying, and then where will you put your stop loss? Just slightly on this 0.6. This was your area of the 0.6. Let me change it. sorry, put that one on the wrong. This one, this color was your 0.6, so this is where you'd put your stop loss on that area. And then what will you what will be your take profit? The first highest point on that 5 minutes candlestick from the left side. And what was that? It is this one. This will be your first take profit. So just take your first take profit when it hits the first highest point on the left side. And you see the market went very well, hit that, then tried to move to make a pullback. So with this, you would have entered this market very well with the key zones. Number one, ensure you are on a good trend, either the uptrend or a downtrend. Then when you are on the 15 minutes, now ensure after you are on the 15 minutes, go back to the mark using the Fibonacci retracement, then go back to the 5 minutes, take a trade from there, and you can take a good trade. So let's look for the another entry. So that was the 5 minutes trade, and you see it reached good. Just look, it reached to the first highest point, and then proceeded up. You will still be on the market. You would have just taken a break even, take profit, and then proceed to wait for the next take profit 2 on the highest point on the 15 minutes. So you'll still have scalped well and gotten out that market with some profits. So that's the first one. So now it has on the 15 minutes, it has broken, it has created another BOS. So we are now done with this part. We have scooped those profits. We come back to the 15 again, guys. So we are done with this one. So we come back to this 15. So this was the highest point, and then it formed a break of structure. What do I do? So let me zoom out. What I will do, I'll just pick my Fibonacci retracement, which is this one, that one. From this lowest point here, I draw upward to that BOS which I identified there, then move sideways to that point. Understood? You can see I've just taken that from that. So I'll come and mark now my zones of interest, which is 5. The 5 is that area. So mark that point, and then go to your 6. That's the 6. Mark your 6 point. This is how you trade, guys. Just aiming at trading what you are seeing. So move out of that market. So you have just identified currently, you can see it's here. So after you identify that, what do you aim to look at? You will now go back to your 5 minutes now to enter those trades. So I'll come back to my 5 minutes and look for the order blocks I was talking about. So is there any candlestick here? Good, I've seen it. Let me zoom out. So for me, I can see an order block here. You see the first 2 green candlestick printed a red candlestick, then moved up. So you take that as a good shot and then draw that. So you already know that's now your order block. And then any now candlestick printed above, you can enter that trade to what will be your first target, the previous highest point. It's this one. So if this is the highest point of the 5 minutes, so the highest point is at this point. So this is the area you should focus aiming at. So on that 5 minutes. So you will enter this trade by taking the wrong position, which is here, and you enter that market focusing to reach which is your stop loss, just right below this, on that point on the 0.6. so that's the area you should avoid and take your stop loss. So you aim at the 5 minutes. That's the area of the 5 minutes. That's the areas, the zone at the 5 minutes. And then you can observe these order blocks. You can see this one. So you can just, for a good trader, you can observe. I've told you the green candlestick then forms a unique candlestick there that acts as an order block. So you can just mark that zone and take your take profit at that point. So TP1 at that point, and you are done for that trade. So for a good trader, always have these key things. So that's the current trend, and maybe for those who have not entered this trade, you can enter it and scalp to that area because the market is not over. I don't know, but I guess by the time I will be airing this video, this entry will have already elapsed, but you will check whether the market will go as shown. You'll just go to the crash 100 and observe. You see currently it's at 65.04, and that's how we trade this crash 100. So I hope guys you have learned something from that, and that's how you just identify. You're just looking for a good trend, and then after you identify that good trend, you now go to take your Fibonacci retracement after marking the BOS highest point and the lowest point, and then from there you can pick your trades using the 5 minutes candlestick. So there is something I want you to note here. So before this, you see this was an uptrend, guys. This was an uptrend. We already discussed that this is an uptrend. The first thing, always ensure you know that trade is an uptrend by using what we were saying, creating higher highs and higher lows. So with that knowledge, you will have to enter markets the way you want and the way you analyze and see. So don't just do guesswork. So that's how we trade the crash 1000. So wait for this profit. So by the time this video will be airing, just go confirm whether it will have reached, and we will have scooped that entry. And that's the way of trading. Ensure the first trend, you know the trend of the market, the structure of the market, and then the entry points on from the 15 minutes down to the 5 minutes. Happy trading, guys. I won't discuss much because you have already known how to trade this market. And comment below if there is any question you want me to always discuss. So have a nice day.